So like, I would probably, once we get down here, if my buy range is here, probably once we get down here, I'm putting my order out, because especially with crypto, it can flush so quickly, and especially when I sleep, right? It might hit when I sleep. And so for instance, if I'm looking to buy, so let's say chances are I'm short from a 29 and change, I'm gonna probably cover right in this area. Right, just because I take it the safe approach. I don't need to squeeze all the milk out of the carton, right? I'm just happy with a good solid profit. Then I say, okay, well, if it gets ridiculously oversold and it hits here, now I'll put an order to buy here, I'll put an order in the middle, and I'll put an order right there.
If you're an investor, you're most likely always looking for new opportunities to get some profits with low risk. But as we'll all know, that type of skill doesn't come overnight, and if you're new, there's a significant learning process that you need to go through before success happens. Just like anything in life, in this video, you can take some valuable nuggets from Gareth Soloway, a master trader with over 20 years of experience trading the markets. This was an interview Sheldon the Sniper did inside the verified investing offices in Tampa, and we believe everyone should know about it. In case you don't know Sheldon's YouTube channel yet, please check for the link in the description and give him some love too. His content is fire, and he is a chill but knowledgeable guy. You can also watch the full video on his channel and see more about Gareth's daily routine. So let's get into Gareth's brain and see how to profit from the crypto markets, both in bull and bear markets. When asked what percentages he trades in his portfolio, he replied he usually trades more stocks than crypto, and this is why.
I don't look at anything really past like the top 30 coins. But within the top 30 coins, everything's following Bitcoin anyways. So it's like, if I'm gonna buy Litecoin, Bitcoin, Ethereum, and what I'm doing is just leveraging Bitcoin, right? I mean, that's really what it is. So with stocks, it's different. Stocks and commodities, like you have stocks that are getting crushed on the day, you'll have ones that are going up on the day. And so it offers me so many more opportunities right now. Hopefully crypto starts to flow into that. But right now, at least, you guys know more about the smaller coins. I know nothing about that, so I don't know any of that stuff,
And does Gareth trades only based on the charts or also fundamentals?
Yeah, I mean, I think I don't do a lot of research, like fundamental research. It's more just scanning charts. So
really, so
yeah.
you're not looking for the news, for the fundamentals that are going to drive it.
No,
not at all.
Not at all.
Wow.
Yeah, it's just purely like what's making. Basically, I'm looking for extreme oversold, extreme overbought, and then the oversold coming into support.
Yeah.
And then looking for factors like time counts, like moving averages, fib retraces, all that stuff. And what I do is when all that stuff aligns, like let's say I get 3 of those things to align and it's all within like a tiny range, I'm like, okay, jackpot. Now that probably is going to be an 80% success rate trade. And so that's where I'll start going in. But even when I go in, I still go in light. Like I've been wrong so many times in my early career and gotten smoked so many times that I just, even when I'm like, this is an 80% winner, I still inch in. Because a lot of times it'll pierce and go a little lower, like panic, right? Panic drives things further than you expect, which then allows me to maneuver and still accumulate more, and then eventually you do get the bounce, and that's where you kind of start to make the money. Like one of the things here, right, is like, all right, so, well, this we didn't have, right? Let me see if I can zoom out. So I'm really looking at time factors as well as like, okay, so mostly trend lines is what I'm focusing on, but then I'm trying to combine other factors. Like there's something called a time count, 1, 2, 3, 4, 5, 6, 7. All right, so that 7's, one of the amazing things about 7's is that it repeats over and over. Almost any religious text you look at, in fact, every religious text, you have 7 days in a week, it's just everywhere, which means it's psychologically inbred in us, right? And so things like that will occur, and so generally you know that, okay, here's your 7 count, you're going to get some sort of bounce. In this case, it's a bear flag, it's holding below, so now the odds are it's going to go lower, right? Also 3-bar surges, 1, 2, 3, generally you'll get some sort of bounce there. So I'm just looking at a lot of these like counts.
A lot of candlestick patterns.
A lot of candlestick patterns, right? Bear flags, bull flags.
Right.
So like I would probably, once we get down here, if my buy range is here, probably once we get down here, I'm putting my order out, because especially with crypto, it can flush so quickly, and especially when I sleep, right? It might hit when I sleep. And so, for instance, if I'm looking to buy, so let's say chances are I'm short from a 29 and change, I'm going to probably cover right in this area. Right, just because I take it the safe approach. I don't need to squeeze all the milk out of the carton, right? I'm just happy with a good solid profit. Then I say, okay, well, if it gets ridiculously oversold and it hits here, now I'll put an order to buy here, I'll put an order in the middle, and I'll put an order right there. DCA in, right? And so in general, it could bounce here, so I'll have some exposure. It could also pierce. Now I have a little bit more exposure. The chances of it not bouncing at all down to here, very low, right? You know, at some point, one of these lines, you're going to get a bounce. And so as long as I kind of space out my orders, then I let the charts kind of do that.
Most people quit their trading journey when things get rough. In case you don't know Gareth's story, he lost money for 5 years when he first started. But he never quit, and this was why. It
was honestly, there was nothing else that I felt as passionate about. Okay. And it was just realizing the life that I could have. It was just saying, I can't let this fail like this. I have to keep trying. And I believed in myself that eventually I would, even though there was doubt. There was lots of times where I was like down. I mean, heck, I always tell this story about when I finally had my account up to 100,000, and one day I lost $70,000. Basically wiped out like a year of gains.
And that feeling is
like honestly, have you ever guys been in this situation where you're like, this has to be a dream? Like, pinch yourself and like, I just got to wake up because this really didn't just...
Is Gareth ready for the next bull run? How do you prepare so you can take advantage of the opportunity?
So like the way I treat it, right, is that I am not alone. One of the realizations as a trader that every trader needs to figure out is like what type of trader you are. I am not a long-term trader. I am not good at sitting and just watching myself be up 10, 20, 30, 40, 50, 60, 100%. I can't do that because I'm too cognizant of how markets are, where pullbacks will happen. Like if you're going into resistance, why wouldn't you take it off the table and then buy on the pullback? So for me, right, so if we're looking at this chart, let's just say we do get above this 30,500 level. So let's say, I don't know, let's say it goes up to here, like to 40. So what I'll do is then I'll say, okay, well, yeah, like let's say right here. Yeah. So then instead of me chasing up here, I'm just gonna sit on my hands, but I know that this now is the line in the sand. This is the major support. So when it pulls back here, I buy.
Yes.
So it's just like, it's like you never, I don't really believe you ever miss a chance. Like you may not capture the whole bull market, but like the beautiful thing, and I hope everyone recognizes this, like retail and every new investor, there's always another trade, right? Have you ever been like, oh, I missed that trade, that was the last trade of my life, I'm screwed? Like no, there's always another opportunity. For a long time, but yeah. So like here, right? All right, so you get this beautiful, and by the way, shoulder, head, shoulder. If you calculate the target, this was your exact low. I actually went on Kitco News, and when I saw this, I said, if this line breaks, the neckline, it will go right to here. It went within
straight
dollars.
Back to full up again. Yeah.
Right, so as a technical trader, now you buy there. And now you're in position. Notice you closed below, but barely, and then it just ripped, and then you can just ride it all the way up if you want. Again, for me, am I the type to ride it up? No. So one of the things I always try to make investors very aware of is that, like everyone was saying, it was going to be altcoin season, right? It was, oh, this is coming, right? So if you have, let's say you have 10 investors, let's see, 10 investors, right? So if 10 investors, and here's your altcoin season, and so one of them buys, two of them buys, because everyone's saying it's altcoin season 3, 4, 5, 6, 7, 8, 9, 10. All of a sudden, everyone is on the long side. And if they haven't run, what does it mean, right? It means that they're not going to, like, who else is left over here? There's no one else left to buy. So the fact that we were hearing so much about altcoin season, everyone got long expecting it, but price still didn't rally. And then everyone's like waiting, like, well, where is it? Well, because there's no one, you're at zero over here in terms of investors.
Why are people not buying more now?
I think a lot has to do with regulation, man. It's just, there's so much uncertainty. I think FTX created some uncertainty in retail, but then I think just the government. You know, you have the U.S. government just, at this point. And they're doing it on purpose, right? I mean, to me, it's a no-brainer that they're doing it on purpose to launch the CBDC because they want to get the CBDC to gain traction in the system. Because if all of a sudden they come out with regulation for Bitcoin and for the other alts, then institutions know the rules and the institutions flood in. By keeping it this way until they launch the CBDC, then no institutions are getting involved. Then they'll say, oh, hey,
That's why it's so crazy, right? That's so volatile.
Fed Now, right? The Federal Reserve is launching this. Fed Now. It's basically a way for you to do direct payments instantly online. What does that sound like, right? This is actually launching within the next few weeks. Once it has a foothold with institutions, then they'll say, okay, now we can do regulation because the institutions are using this. They won't be using other crypto. So.
Does Gareth ever add more to his winning trades?
So this is the key, though, is that if I was a longer-term investor, yes, that's the right move. When you're a swing trader and you're a day trader, you can't add to winning trades because, number one, it's making your average worse, and number two, your entry price is now worse, which means so it might have been a big move up. If you add it up here, now your average is here. It just takes a small dip, and you're negative on the trade. And so because it's such a short time frame, it's always once I'm in the money. Like if I, and that's the way I look at it. Like if I only have a 1/6 position and it just works perfectly, okay, that was the easiest trade in the world. Like no stress. It may not pay me a ton of money, but it was an easy trade. Put it in the win column. It's when the trades go against you that you have to be ready to maneuver. That's why I dollar cost average. So I'm big on dollar cost averaging down or into the negative versus up. Because generally also the charts will bounce, right? You know this. I mean, unless it's a Terra Luna scenario, in general, nothing goes straight down, nothing goes straight up. And so if you can pinpoint the technical levels, maybe the first one doesn't work, maybe the second one doesn't work, but probabilities, which is what our game is, the third one, one of these is going to work. And if you can get your average low enough, when that bounce comes, let's say I get in the money just by this much, now I can take a little bit off, and now let it run more, take a little bit off. And so I value, the longer I'm in a trade, the more it should pay me. If all I had to do was stick an order there and it went up like that, maybe I only made $2,000 or $5,000, but it was like I didn't even have to think. I didn't even have to do
stress.
It's like the easiest thing. So I'm okay with that. It's that when it comes down here, now I got to buy more there.
Yeah,
now
this
I
is
got
the
to buy more
uncomfortable
there.
part. Yeah,
and then all right, so now you finally get a bounce. Now it comes here. Let's say my break even. Well, here was first. So my break even's here. Now I'm exiting some here, which then if it comes down here, I can add back. My average is dropping. Then it goes up here. Exit. It becomes like this game where it takes a lot more effort. In which case, now I have a bigger position. So if it goes up here, I might still exit up here, but at least I'm making more money because it's a bigger position, but I had to work harder for that. So it's kind of quantifying how much energy it's taking for you as a trader, assuming the charts are in your direction.
Did you enjoy this video? Please leave a like and subscribe so you don't miss more curated valuable content like this every day. And if you want to see the full interview, please check Sheldon's channel in the description and subscribe to his channel. Thank you for watching. See you tomorrow for more Daily Crypto.